function in the same way with some slight differences. Not all in. I recommend for the conservative investor 10% of their investable assets, and for the aggressive investor maybe 20%. I certainly would not recommend anyone putting 100% or even 50% of their assets into gold. But 10 to 20% will give you that protection you need when the inflation starts. And then you can, I also recommend having a large cash component. People are often surprised at that. They say, gee, you're the one warning about the collapse of the dollar. Why would you want cash? And my answer is, well, I think the collapse is coming, but not yet. And in the meantime, cash is a good way to preserve wealth. It also gives you a lot of built-in optionalities. You get more visibility as you see things developing. You can pivot from cash, maybe buy more gold at some point in the future. But that's very easy to do when you have the cash. But if you've sunk it in some other assets, sometimes it's hard to get out. So I'm kind of 20% gold, maybe 10 to 20% land, fine art, and 40 to 50% cash. That way you're protected against inflation. Sit tight, watch how things develop, and if you want to move some of the cash into hard assets at a later time, it's very easy to do so. So that would be my model portfolio.
Now, you talked about gold confiscation in your book. That's probably every precious metal investor's worst nightmare. Does that come into your equation as far as keeping a certain percentage in gold? Is holding gold worth the risk you're saying? And do you think silver would be a good alternative?
I think silver has a place for a couple of reasons. Number one, any kind of diversification is good. So if you decide you want a certain component in precious metals, it's good to divide it up between gold and silver to some extent. But again, it is diversifying. Silver is probably more volatile, and of course we all know that silver has use as an industrial input as well as a precious metal. And so one of the things that can happen if you got into a very bad, severe recession, the coming inflation, the way governments respond to depression is to try to create inflation. That's why precious metals do well in depressions and do well in deflation, because it's one thing that governments can always deflate against. And so in a deflationary scenario, and we're seeing some signs of that right now actually with our new inflation numbers coming out, silver could do well on the precious metal vector, but it could do poorly on the industrial input vector. So it's kind of, push me, pull you. It's kind of moving in both directions, whereas gold has almost no industrial applications. So it's a pure monetary standard, a pure play. But I think the diversification factor is good. The other thing with silver, and I recommend new coins. I do not recommend collectible coins or old coins. I think the premiums are too high. That's a bit of a ripoff. But new coins from the U.S. Mint, American Gold Eagles, and Silver Eagles, I think are the way to go because you have a guarantee of quality, and weight and so forth. But in a real disaster scenario where a lot of some of the pillars of civilization begin to collapse, you're going to want to go out and get some groceries or barter for food for your family, and gold could actually be too expensive. In other words, a 1 ounce gold coin might be a year's worth of groceries, and a silver ounce might be more valuable for getting a week's worth of groceries. So, I recommend what they call the monster box. It's 500 1 ounce silver coins from the U.S. Mint. So, 500 ounces of silver. They run, varies depending on the market price, but somewhere between $15,000-$20,000 right now. So it's probably good to have one of those. So, I think gold and silver will tag along for the ride.
James, when you look at the debate right now about the debt ceiling and about what we're trying to do to cut increases in spending, how far can the U.S. national debt go until it reaches some type of psychological level where investors just say enough? The next president is gonna see 20 trillion. I mean, to me, that's just jaw dropping.
Well, it's a very good question, and the problem with the question is that the truthful answer is nobody knows. I mean, I'd probably spend more time thinking about those kinds of dynamics than any other commentator or author I know. And the one thing I've come away with is that you can foresee the direction and the magnitude of the shock, but very difficult to know the timing, and that's why people need to be prepared now. My metaphor, and it's actually more than a metaphor because the dynamics and the mathematics are quite similar, is to an avalanche. You see an unstable snowpack on the side of a mountain just sitting there, and then it's snowing, and then finally one snowflake disturbs a few others that are around it, and those few others spread, and they disturb more, and then it builds, and then it starts to collapse, and then the whole mountainside lets loose, and you have an avalanche that buries the village. Well, who do you blame in that situation? Do you blame the snowflake, or do you blame the mountainside, the instability of the mountainside itself? Well, I think the right answer is you have to look at the instability of the mountainside to get to the cause of the avalanche. And if it wasn't one snowflake, it could have been another. But how do you know which one? In other words, if you have an unstable system, which we do, it can collapse at any time. But it's impossible to know exactly which snowflake, so to speak, is going to cause it. So I think the answer is you don't know when the Fed is going to go too far until it's too late, and then it really will be too late. The dollar will be collapsing around you. So good to be prepared now.
Now, let's say we enter that collapse or the chaos part of your book. Is it likely that the U.S. dollar crisis will cause an entire global fiat currency crisis where, people are holding dollars, that's becoming worthless, and all of a sudden they don't want anything. They don't want the renminbi, they don't want the Australian dollar. There's a full-blown fiat currency crisis.
Well, that's exactly the point. That's why I focus on currency wars as opposed to looking at the stock market or the bond market or the commodities market. And I talk about all those things a little bit, but all of those markets are denominated in currency. When you look at your stock portfolio, your broker tells you how much it's worth in dollars. When you look at your bond portfolio, your broker tells you how much it's worth in dollars, et cetera, et cetera. And so if you lose confidence in the dollar, you're going to simultaneously lose confidence in everything because you say, oh, my goodness, I've got these stocks, but they're denominated in dollars, and the dollar's collapsing, so my stocks are collapsing too. And that's the point. The currencies are the bedrock of the entire global financial system. And then you say, well, what's that based on? And when you realize it's based on nothing, it gets a little scary. And so what I want to do is put a gold foundation, a gold bedrock under the paper bedrock, so you actually can have some confidence in the system.
Now, what are your thoughts on the euro right now? What is the likely future of the euro currency itself?
Well, I've been one of the very bullish commentators on the euro. I think the euro is strong and getting stronger. It's up very strongly this week. I'm probably a minority of one on that. I analogize it to a ferry where everybody's on one side of the boat, and I'm the only guy on the other side of the boat, and the boat's tipping. But little by little, people are kind of coming over to my side of the boat. So there are very specific reasons for this. So my view is the euro system will stick together. None of the countries are going to quit. None of the countries are going to be kicked out. Over time, some other countries may join, and relative to the dollar and the Chinese yuan, the euro is actually going to get stronger. Now, it could get a little weaker in the short run, but what you have to remember, the key thing in the analysis is the Fed and the Treasury are out to trash the dollar. The Fed and the Treasury want a weak dollar, and this is what the currency wars are all about. But in a currency war, if somebody's going to be weak, that means somebody else has to be strong. Not everybody can devalue at the same time. At least comparing currency to currency. And so if the U.S. has a weak dollar policy, that means the euro has to get stronger because the euro can't be weak too. One of two things is going to happen. Either the euro will get a little stronger on its own for intrinsic reasons because they are getting their act together on the fiscal and monetary side, or the euro will get weaker, in which case the Fed will crank up the printing presses. That'll be QE3 or some variation of QE3, and then the euro will get strong again. So it'll either go straight up or it'll go down a little bit and then back up. But either way, the euro is going to end up stronger.
Now, any conflict with Iran, would that actually make the dollar stronger? Because that typically would be global instability. People, want to flight to safety.
I think that's right. A lot of people have been very, curious about the dollar dynamics this year, and they say, well, they'll read my book or listen to one of my interviews and they'll say, wait a second, Jim, you're warning about the, potential collapse of the dollar. Every time we look, the dollar is getting stronger. Well, that's absolutely true. But the reason it's getting stronger is because everything else is falling apart. The Chinese economy is slowing down. Europe's got the sovereign debt crisis. We're looking at war in the Middle East, et cetera. And the dollar is a safe haven. Even people understand the value of gold, but a lot of times they've got diverse portfolios and they're losing everything, losing in other parts of the portfolio. Maybe your stocks are going down and you've got margin calls and you need cash, and people who like gold actually sometimes sell it just to raise cash to meet their margin calls. And so in the short run, the dollar has this very powerful flight to quality feature, but at some point people are going to turn around and realize they've all run into, it's like the whole village is on fire. There's one place that's not on fire and they all run in there. And then suddenly it catches on fire too, and then that's when you'll see potential collapse of the dollar. It's an extreme outcome, but we're kind of heading in that direction for now. But remember, every time you see dollar strength, that's a signal for more money printing because what the Fed wants at the other day is a weak dollar.
Now, with Iran, it would be very Wilson-esque of Obama, just like Wilson, to run on as an anti-war candidate and then go to war. In your analysis, do you think Obama's preparing to go to war right now in an election year?
Well, he absolutely does not want to, but he might, and that's the thing. You have to look at all the players and all the moving parts and all the dynamics over there. Whenever I have a complicated problem or a problem where you don't have enough information to solve it, this is really the art of intelligence analysis. If you had all the information, you wouldn't need analysts because you could look at it and figure it out yourself. The art of analysis is really working on partial information or incomplete information and then trying to work to a solution. And when you're in that situation, one of the powerful tools, analytical tools, is to start with something that's solid. Start with the thing you do know, then work your way through to all the things you don't know. Well, the one thing I think we do know in this situation is that Iran, under its current regime, will not be allowed to have a nuclear weapon. To start there. And if they're heading on that path, which they are, the current regime is moving very quickly towards a nuclear weapon, then they're going to be stopped. And then the question is how? Well, one way is diplomacy, just kind of negotiate with them and give them a bunch of carrots and say, look, we'll let you be a larger power, we'll let you do this, we'll let you do that, but you have to give up your weapons program. Well, that has failed. I mean, both the Bush and Obama administrations have tried that over the last 6 or 7 years, and it's failed. I give them credit for trying, but the mullahs are not really, they're interested in talking if they can stall for time, but they're not really interested in diverting themselves to the nuclear program. The second way, out of it is sabotage, covert operations, and that's going on. We're seeing Iranian scientists being assassinated. We're seeing explosions at military bases. We're seeing cyber warfare, computer viruses that are infecting their nuclear power operations, their uranium enrichment operations, and so forth. So that kind of is going on. But the Iranian regime has proved resilient, and that's it's like a low-level fever. It hurts a little bit, but doesn't really stop you completely. The third way is regime change. If you had a sort of more liberal democratic regime in there, then you might not mind if they had nuclear weapons. I mean, India has nuclear weapons. People don't worry about it too much because they're a democracy and they're capitalist, they're at least capitalist oriented. So if you had that kind of regime in Iran, then nuclear weapons would be less worrying. But we saw this in the Green Revolution a few years ago, and we might be able to promote something like that. They've got elections coming up in March, so keep an eye on that. If the mullahs and the Iranian Revolutionary Guard Corps raid the elections, we might see the second coming of the Green Revolution, so to speak. And the fourth way is war. Basically go in and take out their program with some combination of air power, sea power. By the way, when you say war, don't picture massive invasions of Iran and U.S. troops marching to Tehran and raising the American flag over the Iranian parliament. That's not going to happen. We're not going to invade Iran. It's too big. It's got too many people. There are too many obstacles, and why would you want to do it anyway? We don't need to. We've got air power, sea power, Special Operations Command, sabotage, cyber warfare, financial warfare. We have a lot of ways of basically stopping this nuclear program.